We are back, baby. Welcome to another episode. We've got John Penver, not to be confused with the great John Denver.
I was hoping somebody was going to bring that up. I think we need to have our intro play like Country Road or something. How many times do you get questions about your name? John Denver, John Penver?
Quite a few, and sometimes I'll make an inappropriate comment because poor Mr. Denver lost his head when his home-built plane crashed. And I'm like, I don't sing and I still have a head. But I do appreciate he was a very talented musician. So.
Oh yeah, no, a good dude, a good guy, someone good to be confused with. So it's not an insult. But thank you for coming. We're excited to have you.
Yeah, thank you. I really appreciate the opportunity to be with you guys today and spread a little bit of news about Ionic.
Yes, we're anxious to hear a lot about it. Sorry, Jake.
Just so everybody knows, go ahead.
Oh, well, I was going to say, we are doing a show from 3 different locations for the first time ever. So this is a groundbreaking episode right here.
Well, we actually did the last episode that way too, right?
Did we?
Yeah. I was in Idaho. Yeah. So second time.
Oh, I guess
equally as
we're
groundbreaking.
all 3 in different places. One of them not being the studio. How about that? That'll work. Close enough. But yeah, so John, why don't you joined Ionic, and we're going to talk about kind of what you guys are doing and where you're at now, or what kind of Ionic's goal is. But do you want to just kind of introduce yourself and tell us a little bit about your background and how you came to be where you're at?
Yeah, sure. So John Penver, I'm originally from Australia. My background is actually finance and accounting. So I used to work for Deloitte and Touche. And I had a background specializing in helping companies go public, right? So semiconductor equipment technology. I've been a public company CFO for about 20 years now. And so preceding Ionic, I was working for a company that built physical infrastructure for cloud applications. So for example, we were building AI server racks on an OEM basis for Dell. So if you're buying the new NVIDIA chipset AI servers from Dell, they were probably being built by my prior company. And so we built literally server racks for storage, for compute. We put them into modular containers. We put them into traditional data centers. We're talking billions of dollars of CapEx a year that we were building. And then we were deploying them. So we also built tanks for immersion applications for Bitcoin miners who were using immersion technology. We physically were building the product and deploying it. Then I also had a background working for companies that made infrastructure for data centers, so UPS systems, backup power systems. Some of those were interesting. One used kinetic energy for storage rather than batteries. So my background was more traditional data center space, but with an expertise in helping companies go public. And so that was a perfect segue for Ionic, which was, a startup company that had been formed out of the ashes of the Celsius bankruptcy, for want of a better term. And so, they were looking for someone who could help them take that business, get it operational, and make Ionic a publicly traded company. So that's how I joined. I'm actually acting as the interim CEO for now. That's a temporary gig, I hope, as we'll bring in somebody with a little bit more direct operational experience in Bitcoin site manufacturing, assembly, and operations. So I'm used to a tier 4 data center world versus like a tier 0 that Bitcoin works in, but I've got up to speed pretty quickly. And it's quite a fascinating industry. When people told me about it, I was like, Bitcoin. And I come from a rural background in Australia, and there's a lot of analogies to farming, right? Where you go do all the work, you mine it, you get your reward, then you find out how much it's worth, and you hope that it's more than the cost of doing it, right? Mm-hmm. And I think the other big thing that's really interesting and it's fascinating about it is the ability to curtail your compute load. The flexibility of the compute environment offers amazing advantages, and it's the exact opposite of what I came from, right? Where you wanted 5 nines of reliability and going down was a nightmare. Here, you can actually optimize your business through curtailment, offer benefits to the generator of the power as well. So anyway, a little bit about my background, and I'll twist into Ionic. So Ionic was formed to acquire the Bitcoin mining assets from what was left of Celsius. So they took the equipment and they took some assets out of that bankruptcy and created a whole new company and gave the shares in this company back to the creditors of Celsius. So we have 78,000 shareholders who at some point were creditors in Celsius, and our shares represent about 14% of the value of what they were getting back out of that distribution. But I think the important thing here, and the number one point from my perspective, is that we acquired assets from a bankrupt business, but we're not that bankrupt business. We're a standalone business that's geared towards monetizing those assets and making a viable standalone business for ourselves, to position ourselves a little bit different than the other Bitcoin players. And so you'll hear me say frequently, Ionic is not Celsius, right? We have their shareholders, right? Their creditors are our shareholders, but we are a standalone Bitcoin mining company that was tasked with making ourselves a publicly traded company and monetizing the assets that we got from Celsius. So we acquired 127,000 miners. We had some hosted sites. We had the rights to some other sites. And so what we've been doing since we started in January this year is monetizing those assets, building out the infrastructure in our Ward County site in West Texas, getting those miners deployed. So at the end of September, I think we're up to about 99,000 of the 127,000 miners are now deployed. We'll have the rest of them deployed by December. But let me stop there and see how you want to take the conversation.
Yeah, let's dive into a quick refresher for all the listeners, just kind of high level. Obviously, you've established you guys are not you're not Celsius, but let's go through a little history lesson here on like what happened with the whole Celsius thing to give us a little context to kind of how we got here.
So I'm a little limited in what I know about it. I don't know the whole history of how Celsius blew up, but I do know as that was going through its bankruptcy, the goal of the bankruptcy court is to get the optimal return to its creditors that it can, right? And so as part of, they kind of go through all the assets that Celsius owned, and they had acquired a whole lot of Bitcoin miners. They had a standalone subsidiary called Celsius Mining. And so as they're trying to figure out how to maximize the return to the shareholders, it's, do we liquidate these assets? Do we go sell them for what we can get and just give the money to the people? And different people bid for the assets of Celsius, right? So multiple people were bidding for these assets in Celsius Mining. And so then the creditors committee and the bankruptcy court go, which one do we think is the best option for those creditors to give them the best possible return we can get? And so ultimately, US Bitmain or HUD-8 partnered with some of the investors and said, we'll take over the operation of the business, we'll help you monetize these assets, we'll get a management fee out of it, but we can turn this into a viable large Bitcoin mining company relatively quickly. And we think that offers you a better return for your creditors than if you just went and liquidated the assets. And so the bankruptcy court evaluates the options. They put it to a vote of the creditors. So the creditors got to choose which option they wanted to do. And once they made that decision, they then said, all right, let's set up this new company. And so Ionic didn't even exist as that process happened, right? So Ionic wasn't formed until early January 2024. And then on January 31 this year, we then acquired all the different assets from Celsius, and then we became our own legal entity. And so that's kind of how we got there. But there's probably much more colorful information about what blew up at Celsius that I'm just not privy to that predates, my knowledge.
So are you guys a subsidiary of HUD-8?
No, not at all.
Or US Bitcoin?
No, not at all. They have a small investment, probably less than 1% of our shareholders, of our share capital. So we are a complete independent standalone company, unrelated to those. We have a management contract with HUD-8 for the management of our sites. I would call us a human light organization. So basically we've got these assets. We're paying other people to manage those assets for us. We'll drive strategic decisions around where we have new sites, where we have new power, what we want to do about equipment. We'll consult with those managed service providers at the different sites that we have. but Ionic is its own legal entity, standalone, and our goal is to make Ionic a public traded company here, as quickly as we can do, right? And
Yeah.
they were the goals. And so that way we can provide liquidity options and value to the shareholders of Ionic, who happen to be the creditors from Celsius, right? And in an ideal world, what we want to show them is that they're better off holding shares of us than just liquidating it, and that we think that we've got the ability to make this a very successful publicly traded bit mining company, amongst other options.
So if I heard you correctly, you're kind of running like an asset light model, right? So you guys are actually not even operating the machines. You're bringing in somebody to kind of, and that's like kind of the non-op model that we refer to kind of in the energy industry. If that's the case, how do you think about, how do you differentiate, right? And how do you guys think about that, particularly as you're positioning yourself for an IPO?
So there's a couple of ways to look at it. That's a good question. I mean, ultimately, the reason you'd pay somebody else to do that is because it's cheaper than you building up all that infrastructure, that's SG&A overhead yourself, right? And then you can align yourself so that as you do better, they'll do better as well. And I think when you look at a lot of the Bitcoin companies today, they don't make money for a bunch of reasons, right? They've raised a lot of capital. They've spent a lot of capital on equipment, particularly the ASICs, and or building up all their different sites. And so, we look at it and go, the real value driver is the power assets, number one, right? There's a few things in the world that go on, and the demand for electricity is going to continue to increase, driven by changes in computing. Even the ASICs get smarter, right, and more efficient, but the sites are getting bigger and bigger and bigger, right? And so a 20 megawatt bit mining site isn't going to have many other options. It's never going to be large enough to be a HPC or an AI site. And so as overall computers use more power, you're going to get this convergence, right, between traditional computing and Bitcoin mining, right? And there's a play to have elements of both. And so I think what you want to do is have power assets, monetize them as effectively as you can, and diversify that risk. So you'll have some in Bitcoin, you'll have some in HPC. There may be other applications that are power hungry that value those power assets as well. And it offers, like I said, you always want to keep Bitcoin in there, even though the economics of Bitcoin over time are going to deteriorate through halving and or increases in power costs and increase in equipment costs. But because it offers flexibility of load, that's such a unique attribute compared to traditional computing situations, right? That offers you a whole bunch of flexibility in how you manage those assets and how you monetize those assets, right? And the idea that you can shut off when it's uneconomical to do so, right? Effectively, we're just looking at how do we manage those assets and monetize those assets. You're really a computing infrastructure play that utilizes Bitcoin and or high performance compute to monetize your power assets. That's how you want to position yourself. And I think you're starting to see more and more people talk towards that narrative, right? But the key point here is that they've got costs, they've got infrastructure. If you look at the operating results for many of these companies, they don't make money, right? And that's the difference. Ultimately, you can only do that for so long, and eventually the world's going to wake up and go, I'm not going to keep giving you money to lose money. So how do I get a return on those assets? And we want to be more efficient on our energy asset management and even our equipment strategies, so that if you can't get a return on the investment, then I'd rather be smaller and profitable than larger and loss making over the long term.
No, that makes complete sense.
Do you think? Yeah, one thing I want to ask, kind of expanding on that a little bit, is because of where you guys came in. Celsius, I feel like 2020, 2021, and into 2022, you saw a lot of the public mining companies kind of really grow and explode in growth. Then you had the Bitcoin price kind of collapse, and all these doors got shuttered on a lot of the different mining groups out there. Celsius, I understand, was not public, but do you guys kind of have a view on what went wrong there? And which was probably pretty common amongst the industry participants at the time, and what is going to be different this time, and how you guys are positioning yourself. You've touched on kind of the expenses and a lot of the money getting sunk into the newest and greatest mining machines.
Yep.
It doesn't sound like that's a part of your guys' plan here. Sounds like you're wanting to utilize the existing fleet that they kind of owned.
You probably do both. And I wasn't in the industry back then, so don't fully understand the history of how they collapsed. But I do know people borrowed money for equipment and stuff like that, and then didn't generate the returns because of the decrease in the price. Then you get defaults on lending. Then you wipe out shareholder value. There's definitely a play for it, but it's got to work for everybody. So if the only person making money becomes the equipment company, at some point he's either got to get new customers or he's going to lose the one he's got. So you've got to work in a way that's collaborative so that everybody can be successful no matter what you're doing. Underneath it all, I think the long-term trends for Bitcoin are favorable, right? The whole use of blockchain, I mean, you're either a believer or you're not. But I do think there's a play for better efficient management of your assets, right? And so if you're going to take on a massive amount of debt, for example, to mine Bitcoin without knowing what the return of that's going to be, you're taking a huge risk. Well, you could turn around, just like people are borrowing money now to buy Bitcoin to put it on their balance sheet. It's the same strategy, except that instead of buying ASICs, I'm buying Bitcoin. You could be repeating yourself in the same cycle. If heaven forbid the price of Bitcoin collapsed, they just destroyed all the shareholder value, and now they're going to struggle to pay off their debt, or they're not going to have the capital to continue to do what they want to do. And so you want to get out of that cycle and say, look, this is all about how do I efficiently deploy assets? How do I get a return on the asset? And if it doesn't make sense, then we shouldn't do it, right? And you don't want the capital decision to be driven by a short-term up or down in Bitcoining, right? You need to find a way that no matter what, so can I have the lowest cost power assets? Can I have the most efficient run organization so that even at a much lower price point than everybody else, I can continue to make money, even if Bitcoin's at 40,000, because I've got much lower costs than what my competitors have done, or a more efficient overhead structure, so I don't have to cover all this SG&A cost, so I can still be profitable, lower price point. That's going to make me a more attractive option than every other publicly traded Bitcoin company.
Are you guys owning your energy assets?
So no, we participate in the spot market, but work behind the meter with energy producers. But there's a play down the road where you might get into ownership of generating assets or partner with those kinds of people, just like you'd partner with an equipment company, right? Where you can secure a long-term favorable pricing, right? So that they win, you win, right? There's definitely a play. There's going to be this convergence that's going to happen at some point, because ultimately, again, that macro trend is the increase in demand for electricity. And if you're a very large-scale cloud company trying to build massive AI data centers, and you're going to spot these companies over here that have access to cheap power, that's what you're going to want, right?
Yeah. So, and that was going to be my next question was how do you, because if you're not owning the assets, Fred Thiel talked about this in Atom Power last year. It was like, he was like, I think all of us Bitcoin miners are eventually going to be, pushed off grid, because these data centers are going to come in and just pay more and more and more and more for power and snatch up all of these energy assets. And so we're going to have to go scramble and find the cheap power.
Yeah, and otherwise, and so part of the strategy will be that you will acquire some sites with the rights to the power so that you do control it, right? And then you might go do very well a joint venture with a high-performance compute company and go, I own the site, you've got the need, let's put ourselves together and find a way that we can do that. You probably, as a Bitcoin mining company, lack the experience and the capital to go invest and build high-performance compute, tier 4 facilities. I mean, the capital cost for that's beyond the balance sheet of pretty much every Bitcoin mining company out there. And that
Right.
may or may not be what they want to do. And maybe they get the capital. Some of them will try and do that. But, a new AI data center might want 300, 500 megawatts of power. And, if you could spend billions building out that infrastructure, and that's beyond the balance sheet of most of these guys. But I think there's opportunities for partnership across the sphere. The demand's not going to decrease. And you see the backlog of requests to add capacity in West Texas. And you're going to follow where are the cheapest sources of electricity. There's stranded assets out there. There's renewable energies. What's interesting is, a lot of the renewables, wind and solar, tend to generate in non-peak times. And so, having the ability to use those assets off peak and then take yourself out at peak times to help the utility manage its peak becomes a win-win for both sides, right? And so you can get access to really cheap power off peak. Then Bitcoin enables you to monetize that particular asset that way. Whereas if you had used that for a high performance situation, the whole point of those is you're not coming offline, right? And so that doesn't help the utility in that particular space. So there's definitely a play to be had in the middle of all that. And I think today's Bitcoin miners might end up looking like they're, an energy company or a compute infrastructure company further down the road. And that's where I see someone like Ionic moving itself towards. It will do Bitcoin mining. It'll be a subset of what we do, ultimately with the goal of return on assets and a focus on profitability.
So are you guys actively in the market for new power assets now? Like, are you looking for new sites?
Yeah, 100%. And so we're working with some outside people to try and build a pipeline. Me and everybody else, right?
Yeah, right.
It's almost
Why
like
have we not talked, man? I got all kinds of stuff I can send you guys. We need to talk after the show's over.
Have you got a few, stranded wind farms for me?
We might have some leads on some different stuff. Yeah, we should definitely chat afterwards.
Yeah, but no, it's definitely it's really an interesting industry, and like I said, it's their ability to tap capital. Wall Street's done a great job giving them a lot of money this year, and you're seeing a consolidation, particularly since the halving, which is what you would expect. The economics get worse for the smaller sites, and so it's going to gravitate towards larger sites. It's a normal cycle that you see across a lot of technology sectors, right? And Bitcoin's kind of following along. It just has been less profitable than a lot of other sectors, is my perspective. Yeah.
Well, I'm hoping we're in October, so we're in the October timeframe for Bitcoin, hopefully, and hopefully start seeing it repeat its past performance, post halvings around this time of the year. I'm fingers crossed, but past performance does not indicate future performance. So
no,
we'll see.
True. Well, and you watch it, right? And you would have expected the total hash to decrease after the halving as inefficient miners or unprofitable miners came out. You've actually had the opposite, right? Where the hash rate's gone up. And that's interesting because even the efficiency of the miners, they've all gone and bought S21s, for example, and they have to deploy them. They can't just sit on them. And, you can go buy an S19 for $1 a terahash.
Right.
It's 10% of the cost. And you might not be as efficient, but you might be more profitable, right?
Man, John, I'm glad you brought that up because that's kind of a thesis I've been looking at. For a lot of different reasons. And in particular, kind of goes to Jake's question about owning the power, oil and gas companies. And we do talk about oil and gas companies a lot. Jake and I both that's where we cut our teeth, was the oil and gas world. So, but we do a lot of work with operators on trying to monetize their stranded gas or their gas in general. And I've been running numbers for a lot of different groups, and it just is making more and more sense to me to look at things from an older generation machine standpoint and what your purpose is for your energy use. And it just makes a lot of sense to me to go that route. You're talking about a 4 or 5 month payout in some cases. And so, yes, you're not generating the same, amount of revenue, or scale of revenue, I guess. But from a ROI perspective, it's extremely attractive. And
100% agree with you, Justin. Yeah, it helps them. You're right. You know, the flaring, the wasted energy. It's like, how can I go monetize that?
Mhm.
You know, the question becomes, can you do it in a way that you can get the energy to, you know, you don't necessarily want to have distributed Bitcoin
Right.
mining, right? Because then you've got to connect it all and all that kind of stuff. But there's 100% of play for that,
Mhm.
just like there is stranded wind farms, stranded solar farms that took advantage of tax credits to buy them
Mhm.
and then effectively shuttered down. You know, half the wind turbines don't move when you drive through, you know, West
Right.
Texas, right?
Mhm.
It's like, okay, well, if I can get those assets, and it all becomes about, can you get cheap power? And the advantage of Bitcoin is that you're less environmentally sensitive. You don't
Mhm.
mind if you're out in Fort Stockton or wherever you're going to be in West Texas, right? Or
Mhm.
wherever. And so as you look around the country, you know, what will be important about, and that's ultimately what Ionic as a strategic asset manager will do. You know, we'll have people that control, you know, those strategic value drivers for us. What is our site selection strategy? Ideally, it'd be like, you know, a socially responsible form of renewable energy. Where it's going to be located, we're probably agnostic to it. It's all about where can you find the cheapest power,
Mhm.
and then how can you go monetize it. But I think that's exactly a play with some of the oil and gas producers.
Mhm. Yeah,
Yeah,
well, and I think, like you mentioned, with wind, solar, all of them, even with extremely reduced runtime, if your power price is very attractive, which a lot of those you can get,
yep,
then it makes sense. It just does, and I like it because I don't feel like it's as risky. You're not having to put up as much capital dollars for a project that the revenue is directly tied to a commodity market that has historically had booms and busts.
yeah,
So
yes. No,
it's
that's the right way to look at it,
mm,
and that's why, and I think there's room in the Bitcoin space for a producer like us who's
I do
focused a
too.
little bit differently, and that's how we
Hmm.
want to differentiate ourselves. And so the nice thing is, you know, we have a clean sheet of paper. We've watched everybody else, you know, that been through the trials and tribulations over the last 4 or 5 years. You know, you're the new guy coming in, picked up a bunch of these assets, and go, all right, here's a different way to go manage those. Um, Thank you for making all those mistakes. I'm sorry for all your shareholders and everybody who lost, but okay, I can see what went wrong for you. How do I do that differently, and how do I scale it up? And you know, there's a
That's what
little
I was kind of asking was like, you guys got the benefit of like looking at what happened with their contracts, their powers, or the power, the strategy that they went with. And now you get to kind of look at it from, all right, I don't like that. I don't like that. I like this.
yep.
And what do we want to do to change it? So, yeah, I'm excited for you guys. This sounds
Yeah,
great.
we think we got a great opportunity, and you know, our goal is to get the company public. Obviously, that gives you access to more capital, right? So certainly you have a disadvantage while you're private because you don't tap the capital markets the way some of the other companies have done. But that's the path that we're on, and so you know, we had a couple of hiccups on the way. You know, our initial auditor, RSM, exited the space. They didn't want to audit public Bitcoin companies, and so you'll see some news coming out from us over the next few months as we get closer and closer to achieving that milestone. And
What's your
you know,
timeline approximately? As much as you can talk to about it.
um, yeah, it's probably in the first half of next year, and of course that's always then you throw in things you can't control again, like is the IPO window open? Who won the
Mm.
election? You know, is Wall Street, you know, having a great year or a bad year? You know, the number of IPOs has been down really small this year. The value's up, but the number is lower. You know, or are there other ways to become public? Do you merge with somebody? Do you SPAC? I mean, there's a million options, but the goal is to get the company to a public reporting status so that our shareholders have transparency about what we're doing and how we're doing it. Hopefully, so we can convince them that hey, this is worth writing, right? You know, these
Yeah.
guys look like they're doing something different. Why would I go sell this? Let
Yeah.
me see how this plays out.
I
And
think you
that's
Do
where we
you,
want.
I think you brought up a really good point of like the IPO market is kind of softened a little bit, right? And
Yeah.
you based on your experience, you're kind of brought in to kind of take this thing public, and you've done a lot of these kind of like broader, we haven't seen a Bitcoin miner really go public recently, right? These guys have all kind of been public for a while. Correct me if I'm wrong, if there's something I'm not thinking about. But like, how do you think about having success in going public in like kind of today's world?
No, I think it's a good question. You're right. There hasn't been a new public IPO for a Bitcoin miner for a while. And it's interesting because, when we acquired the assets out of the Celsius bankruptcy, we gave shares to their creditors. We have 78,000 shareholders. So we kind of look like we're a public company already. Now, granted, there's a lot of small shareholders. And so because we're not public, we don't have the same mechanisms to report information and share information with them about how we're doing. So that they've kind of been in a bit of a vacuum. And, we're attempting to do a better job now of, promoting the company, talking a little bit more about how we're doing, right? We're building out a 240 megawatt facility out in Ward County, a town called Bairstow, right? I mean, that's a pretty big operation. And
240 megawatts is a lot.
It is.
Yeah. And, I was out there last week and we're getting ready. We'll announce here, hopefully in the next week, we've energized the next building and we hope to have the whole thing energized by December. But, we've been making those investments since we started. You look at it and go, wow, in January, there was a bunch of dirt out there, right? And, within a couple of months, here's this thing up and running and generating exahash, right? And so we've been doing all the right things. But it's interesting because, ultimately to be a successful public company, you want to have a broad range of shareholders, individual retail shareholders, institutional shareholders as well. And so part of what our job will be over the time between now and going public is attracting some of those institutional investors who provide some stability to your capital base and bringing in some partners, that are willing to help put the money in to help us fund more investments in power assets and stuff like that. And so we've part of our job over the next few months is to introduce ourselves to the capital markets so they know who we are, what we're trying to do, and bring some of those guys in so that we have that demand for the stock, that people are interested in our track record and our strategy and how we're executing. So that's really what we're going to be focused on over the next 6 months. And obviously, you do your audits and you have all the financial information that you're going to need. We've started a website up. I think we need to engage our shareholders a little bit more in the Twitterverse, which is where a lot of them live, right? You see a lot of information in Twitter, apparently. So, but, in the absence of information from us, sometimes people fill the void with mistruths, without knowing information, people like to speculate. And so, my job is to make sure we do a better job communicating what we're doing, how we're doing, good, bad, or whatever, right? But again, this is the path we're on. And I think it's a really interesting opportunity for the shareholders of Ionic. So,
do you have a target market cap kind of or share price you think you guys would be going after?
Not
Is
yet.
it too early? Yeah.
It's too early to tell that, and it's interesting because some if you look at the valuations of some of the companies, sometimes they'll measure them by how many megawatts you have deployed, what's your exahash, what's your revenue. It's not usually a multiple of EBITDA for most of them because they're not profitable. And even those metrics change with the sentiments of the market. So the valuations today look different than they did 3 months ago. Right. And some of the operating statistics, as far as hash rate and total hash and stuff, are just so different than where they were. So those kind of multiples, which would indicate value, are going to bounce around all over the place. And it's a little bit of a lottery. You hope that they're favorable at the time you want to go public, right? And right.
I would hope. I mean, I think first quarter next year is when we're super middle of the throes of a crazy Bitcoin run. You guys be hitting the market just right, probably.
It'd be perfect.
Yeah. Was that part of the strategy here from a timing perspective? Was it first quarter post-halving?
No, not really. I think that the circumstances of the bankruptcy were what they were. And so the timing was just, circumstantial to that. I think if you tried to time the market, you'll never get it right. And right? I mean,
I've tried a lot.
Yeah,
I never got it right.
If we knew the answer to that, we wouldn't be doing a podcast,
Right.
We'd be on an island
Right.
somewhere, right?
Yeah.
Drinking beer. So,
Yeah.
but obviously you can't go public if it's a bad market. But good companies with good stories, with good track records, will always be able to go public, right? Eventually, the market's always yearning for more investments and more opportunities to go place their money somewhere to try and get a better return. And so, the challenge here and the ultimate goal is to make yourself that good-looking company with a good strategy, with a good track record, with the right management team, so that people go, yep, that looks like a desirable option. I'm willing to do that. And you don't want any hair on the dog, right? So it's like we're pretty, and that's the advantage you have as a brand new company. You don't have any baggage. You don't have all that stuff. We just acquired these assets. We're deploying those assets, and this is the path we're on. And here's how we're going to grow that. And so what you'll see is a little more visibility from us about here's the path we want to go down. Here's the things we're going to do to build our pipeline, right? And get people excited about, okay, we look a little different than somebody who's just got 5 or 6 sites hosted or self-mined or whatever.
So these are kind of basic questions maybe we could have asked at the start. How many megawatts do you guys currently have kind of operational, and what's your hash rate overall that Ionic has?
Yep. So I believe at the end of September we're about 9.9 exahash with about 331 megawatts deployed, and we should be over 400 by the end of the year. And I think we should be up around 13.7 to 13.9 exahash once we're fully deployed at that level. So to give you an idea, that's kind of the magnitude of it. Obviously,
so it tells you there's new generation machines you guys are going to be bringing online with those,
and or some of the old
stuff.
Some of the old stuff that we've got that we're ready to deploy as we build out the infrastructure at that facility in Ward County, right?
Yeah.
And so then the next step will be to build the pipeline beyond that. So what comes behind that? And if
are you guys targeting states in particular, states or locales, and how does the upcoming election impact kind of your view on where to go?
I'm a little as far as Bitcoinings go, I'm a little agnostic to the election, right? Unrelated, I might have different views, but I mean, I think
we want to know all those views, John. You got to tell them all right. I'm joking, but go ahead.
But we're not targeting a particular state. I think we're looking at the lowest cost energy assets that we can find, and where are they? I think in the main, the West Texas ERCOT region probably has the lowest energy costs right now. It's also got a huge backlog, but we're looking at opportunities across different states right now for additional sites. We have a management services agreement with HUD 8, and part of that involves them introducing us to new sites as well, where we can add another, I think, up to 300 more megawatts in the next 12 months, and then build out those sites, and then figure out how we want to monetize the equipment in those sites. Do we buy used? Do we buy new? So if 12, 18 months from now you're at 700 megawatts to a gig, you've become a substantial player in the US Bitcoin marketplace, right? It's going to put us in the top 4 or 5 people. So that's a nice little segue, to come into the market new, right?
Right.
So that's kind of what we're looking at. So, there's probably some people who think one way or the other might influence where Bitcoin goes, but I think I'm smart enough now to realize my predicting ability is close to zero as to where Bitcoin's going to go. I just hope it's up.
Yeah, right. Yeah. I'm with you on that. Well, look, I think this is great. It's always nice to find another well-capitalized participant in the market. So I'm excited to see what happens with you guys and kind of what direction you go. We also need to talk when we're done with this about some future sites. So I want to know more about what you guys are looking for and what we could maybe get in front of you. Collaborate with some of the groups I work with.
Well, hopefully you guys will stay in touch and we'll be able to continue to give you some progress reports about how we're doing. And your listeners can let us know what they'd like to know about the company, and we'd be happy to share that information.
That's a good idea. We should do a Q&A episode.
Yeah.
Yeah, that is a good idea.
We should just like take questions, just kind of generally. That'd be interesting. If you guys want, send Justin an email.
Do it. Jake I got to figure out what his email address is. I'll make sure to give it out. Send all your questions there. But look, John, I've enjoyed talking with you. I think it's a nice perspective to have somebody that has kind of a background not just from Bitcoin and someone who's been involved in the public markets so much for a career. It's really good for us to get to talk to people like you and coming at it from a business side and not just kind of a Bitcoin fan side is always very educational for people. I think it's very important too. I think kind of what we were talking about before, this industry tends to get kind of a Wild West reputation, and a lot of it is earned because of the way things have been handled in the past. And it is the same for probably a lot of industries that have tremendous potential impact. Is early on, they're very kind of wildcat crazy folks. And, but then it develops over time and the industry grows and matures. And I think that's kind of where we're at right now in the mining space is I'm seeing a lot of maturity anyways. And I think that it's just going to continue but it's also a unique industry that allows, small guys to get in and build their own company the way they want to. It's just one of the kind of beauties of the mining industry. So glad to have guys like you in it.
Well, thank you. I really appreciate it. And I appreciate, like I said, the opportunity to reach out to your listeners. And I think that's a good perspective, Justin. I think the industry is maturing. They'll bring in some more seasoned professionals, and that won't take away from that. You could end up using your facilities to help host for the smaller guys that want to get into that play, where they can still participate without needing as much investment as the cost of playing goes up as the scale gets bigger, right? And so I think there's a role for all of that to continue as the industry matures. And like I said, it's a very interesting space. It's definitely unique. It's definitely fun. I'm certainly enjoying it and learning all about it and meeting all the different players as I get used to the new job. So it's good.
Well, thank you again for coming, man. I'm sure we can do it again. We should. I don't want to say we're running out of people to talk to, but I think it's time we start bringing guests back and having them come on multiple times. We can kind of see how things are going. So we'd love to check in with you again after a few months, kind of see how the whole process is going when Bitcoin's at 150 here by January.
Yeah, I'm looking forward to that too. All right, guys.
I hope so.
All right, really appreciate it. Have a great afternoon. All right.
Thanks, guys.